Well, the numbers coming in for Tech Mahindra, and it looks like it's a big miss versus the expectation. And I say that because the constant currency has actually declined by 4%. We were expecting that there's going to be a decline of 2.5%. A big miss coming in on the margin front. The EBIT margin has come in at 6.8%. Of course, we were expecting that the number will be close to 10%. So that double-digit margin is a thing of the past. We were talking about a 14% exit rate for the year. That doesn't seem likely at all. The TCV has come down to around $360 million. Again, towards the lower end of the range, the expectations were wide from $400 million to $700 million. But the company hasn't managed to, meet as far as that is concerned. I'm not sure which guidance they're talking about, the 23 to 23.5%, because Tech Mahindra achieving that guidance doesn't look likely. So let's wait by and get more details on that. But the first look is that the revenue is below expectation. The EBITDA is a far cry from what we were expecting. And the profitability too, we were expecting a 4-digit number. The actual number has come in at around 3-digit, around 700 sub crores as far as the profitability goes. And that's why it's a big miss coming in versus the expectation. Yes, attrition has cooled down, and the fact that on a quarter-on-quarter basis, the headcount is also lower. But one has to take cognizance of the fact that Tech Mahindra has higher exposure to the telecom and high-tech vertical. That has been weak across the board for all the companies. So the expectations were fairly muted in any case. But the company has gone ahead and disappointed largely on account of the margin performance. And that's why there's a big miss coming in on the profitability front. So the EBIT margin has come in at 6.8%. The US dollar revenue has come in at 1,601 crore. We were working with an expectation of $1,635 million as far as the top line goes. Let's go across to Sandeep Agarwal to take his take as far as this entire Tech Mahindra earnings is concerned. Sandeep, I don't remember the last time we saw a margin profile of around sub 7% for the company. Last year or in FY21, the EBIT margin number used to be well above 16%. Now 6.8%.
Yeah, so this is obviously a very weak set of number, and as you rightly mentioned, these things happen once in decade type, and we have seen this last quarter in one of the companies, and then that company bounced back substantially in the margins, and so the stock price. So I will just say that there is a lot of things which are happening, lot of moving parts happening, lot of leadership change and all. So obviously weak set of numbers. There is no respite on any front from that, and no way they can be called one-offs. But I would just say that this thing provides an opportunity once in a decade kind of situation where we should look at it in the perspective that this could be the worst, and worst is probably behind. So with that perspective, one should look at the numbers. Any which ways, expectations were not high, but the numbers are actually much poorer than the expectations also.
And the expectation, and pretty much the management is also reiterating what they are saying. CP Gurganani is saying we are confident that we have the right strategy and the right team to overcome this temporary setback and deliver long-term value for our customers and shareholders. And Rohit also said this quarter was a challenging one for us as revenue growth faced strong headwinds, and that had an impact on profitability. We have taken swift and decisive efforts and actions to address these issues and improve our execution. So a clear acceptance coming in from the management that the revenue performance was dismal this quarter, and that's why, of course, you can't expect much in terms of the operating leverage as well. But Sandeep, would you expect this to be a one-quarter issue? Because the weakness that we are seeing in high-tech communication, it seems to be a bit more structural and not a one-quarter issue. Do you think it's a client, a segment-specific issue, or it's going to be weak for tech and before it gets better?
No, you are absolutely right. So, if you ask me from a perspective that will it be like other segments going forward? The answer is no. But will it recover from here? The answer is yes. So what you are seeing today is probably worst in terms of all the parameters. So things will improve from here substantially. Also, I would request you to look at, wherever in last 3 to 5 years, this kind of numbers have come for any company, it has generally been one quarter phenomena only. And from there, generally we see sharp turnaround. Because you remember one thing that, in IT, particularly software services, no one does business at this kind of margin. These are very, very, very temporary in nature. I would not say even 2 quarters. I would say these are generally one quarter phenomena. So you will see a sharp recovery in margins and growth. I am not too much worried because I think, whole sector will start seeing some improvement now. If you see the ISD data also, it also clearly suggests that things will improve from here. But I will not say that high-tech will grow like other verticals, but it will recover from here for sure.